Don Kaufman here at TheoTrade. It's July 3rd, 2017. We had a shortened trading session and we still saw some decent volume over here. So I think a lot of traders have kind of dismissed, if you will, this entire week, ultimately because of the July 4th holiday. Well, surprise, surprise. Sure, the S&Ps were largely unchanged, but the way I see it, the S&P still did 750,000 contracts in this shortened trading session. The Nasdaq ended up down 1%, and the rest of the week, we're heating up for some volatility, and allow me to show you where some opportunities might lie. First of all, before we get into any opportunities moving forward, and there are a lot of opportunities that are kind of facing us the rest of this week. I talked about this in the weekend video. I hope a lot of people jumped on it, but one of the key opportunities that I discussed was shorting Facebook. And this was no hesitation whatsoever, shorting Facebook. And why I specifically discussed shorting Facebook, it was only 5 days removed from its all-time high. And when you started looking at like what I kind of call the powers that be, which are Microsoft, Facebook, Apple, Google, Amazon, when you looked at the, the really big players out there, okay, we looked at Microsoft, well, that was quite removed from the all-time high, and we looked at Google, and Google was in, kind of a downward spiral. I'll come back to Google here momentarily. All right, we looked at Amazon. We saw some pretty good opportunity in Amazon, but the single best opportunity, note, by the way, I didn't even go to Apple over here because Apple has been getting hammered since the larger decline from, again, that 155 all the way down to the mid 140s. Nevertheless, we found that the best percentage opportunity, if you're going to be short something, we were saying short Facebook. Well, guess what? It paid off to the tune of almost 1.7% inside of the decline today. Now, time out. You don't short a stock that's already in the hole. Do I think that Facebook could have more downside potential? Absolutely. Without unequivocation, I say that. But after one of the largest down moves we've seen, okay, in some recent trades inside of Facebook, I hesitate over there, and now I'm going to look for other opportunities. Inside of, again, today was a shortened trading session. The Nasdaq, okay, gets pummeled, but it does it on decent volume. And I got to zoom into this because it's a very, very important point that the Nasdaq today, with literally chopping 3 hours off the trading session, still did as much volume as it has done in many full trading days. And that one just really resonates with me because, everybody, again, they're really dismissive. It's July 4th, nothing can happen. Okay, of course things can happen. A 1% decline ultimately happened over here. You want to see something else that was interesting? How often do you come into a holiday and see volatility getting bid up? The entire trading session today, we saw volatility getting bid up. And the interesting thing is volatility is getting bid up when the S&Ps were actually up in the morning, okay, as high as 2436. We saw the S&Ps up like, 13, 14 handles, and yet volatility was rising throughout the course of the trading session. It was a great shorting opportunity, especially for intraday traders, okay? Aside, Facebook aside over here, which we were spot on, it was just a great shorting opportunity today. As volatility was rising, it was throwing out, like, what else do you want? Smoke signals out there, okay? Good intraday trading session. Anyway, switching gears a little bit over here, what's your next opportunity? Because we've always got to be forward looking here. What's the next opportunity? Well, our target play is already happening in here. When I say the target play, we got long target. Target's up about 40% right now on an in-out spread, something we actually mentioned just about 10 trading sessions ago. We do have a VIX position on. The VIX position is sitting largely unchanged over there. But let's go back and look for opportunity right here, right now. And I'm starting to see that opportunity specific to the XLF. Okay, the XLF has really intimidated me recently in this kind of wild up move. However, inside of today's trading session starts to see a bit of a reversal over here. Okay, so the XLF is up for a number of reasons. Number one, it seems like a rotation. What's the rotation? Well, the rotation right now is ultimately out of technology, out of the Nasdaq into the financials. We're also seeing some buy-side activity right here, which is the XLE, it's energy. Okay, so we're actually seeing, again, big buying going on in the XLF, big buying going on in the XLE. to me, the opportunity at this point is to take a small, albeit defined risk trade in the XLF. Which direction? Bearish. I would look for a bearish play inside of the XLF. Why? You know, the XLF has really taken off from this 23 level to the 25. Very, very unexpected. But if you take a look at the bond trade, you got to realize it's the bond trade that's really driving the XLF. This is 1, 2, 3, 4, 5 straight down days. Okay. All of a sudden the market, oh, interest rates are going to go up. Please, the Nasdaq is falling right now. All you're going to need is one bounce to the upside in the ZB. All we need is one bounce day. Okay. With one bounce day inside of the bonds, they'll pummel the XLF, and it's likely going to proliferate and spread to the entire S&P 500. One of the things we've also picked up on in the last couple of trading sessions, which we mentioned in the weekend video, happen to be the correlations are coming much back into alignment in the broader market. That means stocks, okay, are moving with one another. We're not just getting chaos with one stock up and one stock down. Okay, we're still seeing sector rotations out of tech again into financials. Nevertheless, the correlations are picking up out there. It does again look like a lot of risk to the marketplace. Now, I also want to caution you here. Go defined risk when you go into the XLF. If you're going to short that XLF, go defined risk. Why? Well, if you take a look at the Nasdaq. The Nasdaq, all right, again, I don't want to short into this mess. I'm already short the Nasdaq, and I've mentioned that time and again. I'm short 3 Nasdaq futures. I remain short 3 Nasdaq futures. Position is ultimately going well. I would not suggest shorting into the hole at this point, and I like the position inside of the XLF. Okay, you know, if you want to take advantage of the possibility of a downside inside the S&Ps, that's it. There's one other great short opportunity. I don't think a lot of people are looking this direction, but look at the Russell. The Russell is also really seeing, okay, its best closing high ever. Now, yes, there's a kind of a reactionary high here at 33 and change, but this is the closing high, like an all-time closing high inside of the Russell. I would also suggest a defined risk short position inside of the Russell. And if you're not comfortable with the rut, just cruise over to the IWM. And the IWM, again, we're talking about some serious volatility in the marketplace, and yet the Russell completely and totally unscathed. And one of the reasons the Russell is also performing stellar day in and day out. Why? Because it's interest rate related. As soon as the interest rates start to come up over here, though, you would think that would put pressure to some of the small caps over here. Thus far, it has not. A lot of things to think about here in the holiday weekend. I want everybody to, of course, enjoy the 4th of July. But coming back into Wednesday, Thursday, and Friday this week, people expect a little bit of volatility, right? We've got a lot of different trades on right now. Everything from our tetrapod spread, which is going phenomenally this week. We've already got the Qs up 40%. Our spider position up about 9%. We've got positions on the volatility index. We've got positions in Target. You know, we shorted Facebook, covered it already. Google is dangling off the edge of a cliff and actually into the gap. So for those of you, you know, kind of curious about Google, I think, is a sign of much more sell-side activity to come inside of the Nasdaq as a whole. Again, a lot to think of. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful holiday. Be back, of course, on Wednesday, Thursday, and Friday of this week. Bye-bye, everybody.